Tesla's down in the pre-market. Electric reporting the EV maker plans to lay off more than 10% of its workforce in wake of falling sales. The tech publication cited a company-wide memo from Elon Musk in which he's quoted as saying the cuts are necessary to prepare Tesla for the next phase of growth. Reuters later matched that headline. One of the lines from the email regarding layoffs from Musk says, "There's nothing I hate more, but needs to be done."
Well, if you look at the stock performance year to date, and it continues to fall, questions about EV demand, Tesla's been in the spotlight. We've seen price downgrades or target cuts every single day on this stock. We know they're dealing with something, and after the last delivery update, clearly he's making adjustments.
Saw my first Cybertruck yesterday. I don't know if you guys have seen one on the roads.
They're cool.
Yeah, they are cool.
You clearly do not follow Kim Kardashian on Instagram.
Barreling down, I don't have Instagram, barreling down Broadway. Actually, I did finally get Instagram only because people keep sending me Instagrams, so I got to have somewhere to look at what they are. But
so pathetic.
I am pathetic. Thank you for that, though, for reminding me. When it comes to Tesla, I mean, the key question continues to be, of course, overall demand, the competition from Chinese EVs that we've talked about. You were at that showroom, Sarah, not very long ago, looking at the quality of those automobiles that compete worldwide with the company. Shanghai obviously continues to be its main factory.
This story has brewed since 5 a.m. when I got here. So let's talk about the evolution of that. 10% of the workforce, what does that translate to?
10% of the workforce translates to about 14,000 staff worldwide. I've just broken the story, Manus, with the stock down 1.4%. That there is another development. Drew Baglino, who was the senior vice president for powertrain and energy engineering, resigned in the last 24 hours. Drew Baglino has left Tesla, and this is separate from the layoffs. My understanding from a source is that he resigned of his own volition. The timing is interesting. Drew Baglino is not a household name, but he's incredibly important to the history of Tesla. He's one of just 4 stated or listed executive officers, or he was, and has been at the company for more than 17 years, reported directly to Elon. Responsible for everything energy related, the powertrain on the cars through to the energy storage product. That's a really interesting development. We've also reported in the last couple of minutes that Rohan Patel, who is basically the public policy chief at Tesla, has also left the company. Less clear if that was to do with the 10% layoffs or not. What Elon Musk said to the company last night in a memo that sources shared with me is that they had just grown too fast, and in many cases there were duplicate roles. This is a 10% cut. The last cut in 2022 was also 10%. And you and I, when I was in New York, if you remember, talked about the big miss on deliveries in the first quarter. You know, it's a company facing macro headwinds, but the stock down 1.3%. The layoffs part of that story was quite well telegraphed. The rumors started Friday night, but the Baglino piece, quite a big one.
Lately, Tesla seems to be hitting a bump in the road. First, there was the slowdown in Q1's deliveries. Then deliveries of the company's much-anticipated Cybertruck had to be paused thanks to an issue with its accelerator. Now, the plot thickens with news of Tesla trimming its workforce by a whopping 10%. And news of this kind can, no doubt, send chills down the spines of investors. However, there may be more to this story than what meets the eye. Could these layoffs actually be a strategic move by Tesla to streamline operations? In other words, should investors be bullish or bearish because of these layoffs? Buckle up, because we're about to take a closer look at the potential reasons behind Tesla's workforce reshuffle. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Speaking of the laggards in the big cap tech category, let's talk Tesla. I got Jenny Horn here with me in the studio. All right, Jenny, so layoffs at Tesla, let's talk about it.
Per this internal memo we've gotten from Elon Musk, and according to Electric was the first to report this, that they're laying off around 10% of their workforce. Now, there had been rumors it could be 20. So, I mean, I think that this is still fairly, we haven't actually gotten confirmation from the company, but 10% was better than feared. But that impacts around 15,000 employees of their 140,000 roughly workforce. workforce. Keep in mind, though, Tesla has been on a bit of a hiring spree. If you look from 2019 through 2022, the calendar years, it was increasing its hiring by over 40% just until last year when it only hired 30% more people. So you hear 10%, and I think it puts everything in context.
The trajectory's kind of been topping out for their workforce. It slowed down.
Yes, but also I think when you're growing this quickly, you can oftentimes have these redundancies and like less efficient operations. So that's what they said. This is to cut costs and become a more efficient automaker. Also important to keep in mind, though, layoffs are a routine part of a company. I feel like you can read this headline so wrong because I initially saw laying off 10% of their employees after dismal first quarter deliveries. Well, it's like I don't think that necessarily speaks to the health of the company because 2017 they laid off 2% of their workforce, 2018 9%, 2019 7%, and then 2022 10%. So this just falls in line with some of the reductions we've seen, again, because they are on such a nice pace of hiring.
But on the upper end, too, of the sizing of layoffs that they've had.
Yes, so I guess that is the argument that this is the most significant, and their workforce is the biggest it's ever been. So of course that 10% impacts, 15,000 employees is no small number.
On the one hand, it seems like a very unsurprising story, given what we've seen in the stock, what we've seen in the auto space, struggling, and especially the EVs in particular. The market has shifted the optimism back to Ford and GM, where we've seen, seems like, overproduction of EVs at the moment. Price cuts for many of their vehicles. Hikes too, but generally cuts. It seems like an environment where we should be expecting layoffs.
It does, and I will say I know that this is all part of his broad commitment, his being Elon Musk, to like building out, of course, scale over sacrificing some of their margins. So I think that efficiencies are important, but yeah, if you're saying that you're growing at such a healthy clip and you're unable to keep up with demand and you're unable to keep up with how busy your factories are, you're not doing that.
Yeah. I do wonder, though, if this could actually be good for the stock.
Year of efficiency was the best thing that ever happened to Meta.
Yeah.
So that's what a lot of this internal memo said, is that they need to be more cost efficient.
And the one thing they actually do have going, not only relative to their electric vehicle making competitors, but also Ford and GM, is that their margins are pretty good. So if they can make cuts to fatten those up a little bit, then it might help a little bit. So, shares will take anything basically at this point that's not outright negative, trying to hold on to the lows of the last year.
Yeah, and I completely agree with that. And I think when you're comparing to GM or Ford, say, for like valuation purposes, even though it's nowhere close, but they were able to also completely avoid what was a total headache over the summer with the UAW. And so that is one thing. So now we're seeing this reduction. I don't think it means that it's a complete tie to disappointing numbers. But yeah, this is a company that is right now fighting for very critical market share that's only getting more difficult to come by.
In recent months, there have been rumors of a coming layoff of some Tesla employees. According to a Bloomberg report at the time, Tesla had called for managers to begin identifying the most vital roles for the company. The automaker also delayed some workers' performance reviews, although the reviews were later rescheduled. However, there seems to be some truth to those whispers about layoffs, as Tesla recently confirmed that it's letting go of a chunk of their workforce, over 10% to be precise. Now, this kind of news can be unsettling, especially at a time when Tesla is threading in the low, so we think it's important that investors understand what's actually happening.
The stock is down 31%. This is in some ways mutual decisions. Mutual decisions, strategic decisions. Either way, it's quite an evolution of change in who's going to be running this business, isn't it?
Yeah, there's always been a question about succession with Elon Musk, or how things work. If you read the Walter Isaacson book, or actually Ashley Vance's book on Elon Musk, he was a micromanager. But in more recent times, the company's actually been in quite rude health from a sort of bench of talent perspective. One of the things that I understand from sources about Drew Baglino's decision to leave was actually he felt that the company was in a good place in the areas he was responsible for. 4680 is apparently going quite well. There is a deep bench of talent on the energy side of the business. And as Elon Musk talked about during earnings, the growth in the energy business is expected to outpace the car business this year. But it means that Drew Baglino is not next in line to be the CEO of Tesla if Elon Musk ever decided to step down. So now we can start having conversations about who that future person might be, if at all Elon Musk ever decides that he doesn't want to be the CEO of Tesla.
First things first, it's important to note that Tesla's no stranger to conducting layoffs to streamline its operations. The automaker has had periodic layoffs in the past, usually justifying them by saying it was necessary to weed out inefficiencies or trim the fat after a period of rapid hiring. This time, however, it feels a little different. For one, it comes on the heels of a rough quarter for Tesla. Deliveries were down, which is the worst thing that could happen to a car company. Plus, there's increased competition in the electric vehicle market, especially in China, one of Tesla's biggest playgrounds. We can't also forget to mention the resurgence of hybrid popularity, leading to lower EV demand. A lot has been happening, so you can probably tell by now why Tesla might be feeling the squeeze. And yet, Tesla said that the layoffs happened because the company is trying to reduce costs and increase efficiency. So what does this all mean? Will the layoff help Tesla perform better in the coming weeks? Let's find out. Hello everyone, and welcome back to Investocracy. Now, it's undeniable that Tesla's CEO, Elon Musk, has a history of reducing staff to cut costs. The billionaire famously cut Twitter's workforce in half after he purchased the platform in 2022. And even Tesla has conducted several rounds of layoffs before. In fact, just last year, the automaker laid off dozens of employees working on its autopilot service in New York. At the time, the company said the terminations had nothing to do with a union campaign at the facility that had been announced the week before, adding that it had dismissed the employees for their performance issues.
Hey, Shauna, what's up? So yeah, basically Electrek, the tech blog, basically had this, they got an email from, or secured an email from Elon Musk confirming that 10% of staff were going to be cut at Tesla. He's talking about how they want to set themselves up for the next growth cycle of the company. The layoffs, there were some redundancies there, but they were painful but needed to be done. You know, I can't say that we were surprised here to hear that following their Q1 delivery report where such a massive buildup in supply, something needed to happen here, and I think that's what's going on right now with the stock. You're seeing the reaction there to the downside here, not exactly a positive move. I think we're hearing from Wall Street analysts like Dan Ives telling me that it's an ominous sign for the company to be doing this right now, given the fact that they're navigating this quote-unquote Category 5 sort of storm here with their demand story. I also want to add separately that the electric blog reported that the Cybertruck was actually going to have its production shift length shortened, and that sort of kind of flies in the face of what we've been hearing about demand for that truck, which supposedly is off the hook. So a lot of things happening there in Tesla land right now.
Pras, what should investors keep tabs on as we're waiting for more of the details to really develop around this? And how do they price it into the stock going forward?
You know, I would have expected maybe a move to the upside here whenever you hear about other automakers doing sort of similar moves, not to the extent of 10%, but I guess it's so extreme that investors or maybe Wall Street even a little bit concerned here about the fact that is the demand story even worse than what we're hearing? We're going to get earnings from the next week, so we'll have a better idea. Probably going to ask about Cybertruck demand, ask about what the labor sort of story is looking for Tesla right now as it sets up for potentially that Gen 2 vehicle that we heard about, and then it kind of went off the table and now might be back on. So we'll see what happens next week.
Tesla laid off some employees because it's likely looking to tighten its belt and get more out of the people that it keeps on board, especially as it experiences very difficult times. So let's talk about how the layoffs might help Tesla. First, the layoffs might target redundant positions or areas with overlapping responsibilities. By eliminating these duplications, Tesla could free up resources, whether human and financial, so they can be better directed towards producing more vehicles or advancing technologies like FSD. Secondly, the layoffs might be a way for Tesla to invest in automation. Maybe some of the laid-off workers were involved in tasks that could be more effectively and consistently handled by robots or AI. While this wouldn't necessarily mean more cars leaving Tesla's factories, it could potentially mean faster production lines with fewer bottlenecks caused by human errors. As for saving money, managing partner of the Future Fund, Gary Black, pointed out on X that Tesla laid off around 14,000 employees, and if we assume that those employees get an average salary of $100,000 annually, then by doing the math, Tesla would end up saving around $1.4 billion a year. Of course, this is all speculation based on what Tesla has said publicly, and there's still a chance that the layoffs might not have a direct impact on production at all, and could instead be more about cutting costs in other areas. However, Tesla fans and investors must also note that producing more cars isn't just about having more people on the assembly line. Rather, it's about having the right people in the right places with the right tools and processes in place. If these layoffs help Tesla achieve that ideal state, then maybe, just maybe, the automaker will see a bump in production after all. So, what's next for Tesla? And should investors be worried about these layoffs? Let's find out. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. That said, back to the video.
Let's check the tech sector right now. Our next guest says that from the Magnificent Seven, 6 are still magnificent. Joining us now, Doug Clinton, Deepwater Asset Management managing partner and co-founder. Doug, can we assume, is Tesla the one that got booted out?
It is. I mean, just, Mike, when you think the news couldn't get any worse for Tesla, we have EV demand questions that have been popping up over the last few quarters. We have questions now about whether they're going to build the low-cost Model 2, price cuts on FSD. I think that investors are still questioning now, is Tesla still one of the Magnificent Seven? For us, I think it's clear there's 6 that are incredible companies. I think Tesla is still a really great company, but it's the one now that has the most to prove.
The 6 that do remain, for the most part, are being animated, maybe with the exclusion of Amazon and Apple, by the AI excitement. Is that correct? Obviously, there's been some break in momentum in things like Apple, but what would you right now at today's prices prefer to emphasize in terms of these names?
I think one thing that struck me this weekend, we think about the global conflict that we're dealing with, something we were saying last October when we were concerned more in the markets about rising rates is all these names, all 6 names, are in a way both offensive and defensive. And that's the thing that we think a lot about when we try to position our portfolios with the Mag 6. I think these stocks are offensive because, to your point, most of them do have AI exposure. They all have pretty great growth profiles, but they're also defensive because they have fortress balance sheets and because they generally sell products that I think would be well positioned to weather any sort of economic issues. So I think that's the way that we should be thinking about these stocks. They aren't trading at egregious multiples, despite what I think some other investors might think, given the moves they've had. The group trades about 30 times forward earnings. The peak over the last 10 years, 38. The trough is 20. Are they cheap? No, but are they egregiously expensive? I don't think they are that either.
Many people online were talking about how Tesla's Q1 earnings will be so bad that the company started laying off people to cut losses, but this doesn't make sense because Q1 is already over, so layoffs now definitely won't have an impact on the quarter's results. They might have a positive impact on Q2's results, or in the long term, in general, but we can't expect them to have a drastic impact right away. Besides, all Tesla investors already knew that 2024 wasn't going to be a great year for Tesla, and Elon Musk himself said so during the company's last earnings call. Likewise, we know Q1 earnings won't be great thanks to the lower than expected delivery numbers. But maybe the company managed to recognize enough revenue from FSD to make earnings hurt less, or maybe the energy side of the business, which is doing well and has a lot higher margins, will offset some of Tesla's losses. Since earnings will be out next week, and we're almost sure that they won't be great, Tesla's stock will definitely take a hit. It could fall back to the $150 mark, or maybe even lower. So if you still want to buy more Tesla shares, you might want to wait after earnings. Regardless, Elon Musk and Tesla's management team must clear everything up in the company's earnings call next week and give us more information on the energy business and where the automotive business is heading. They could also give us more clarity on the layoffs and talk to us about why they happened and how they expect them to help the company in a lot more detail. The auto industry is constantly evolving, with new technologies emerging all the time. So Tesla needs to maintain strong efficiency and competitive advantage in order to keep going. Layoffs might help Tesla save some money now, but they aren't a sustainable cost-cutting strategy as they can do more harm than good, especially to the morales of the employees not affected by the layoffs. So, the company should consider exploring alternative cost-cutting measures. Maybe it could negotiate better deals with suppliers or find a way to automate and streamline administrative processes. It can also start offering more perks and discounts, like the 1-month free trial for its FSD or the big discount on its supervised FSD subscription from $199 to $99 a month. By doing that, Tesla can get more people to buy and use its cars. Of course, this is not going to work like magic. The global economy is a fickle beast, and unforeseen circumstances can always ruin the best-laid plans. To sum up, Tesla's layoffs may not be the best solution to its problems right now, but they still represent a significant move for the car company. It also shows that even the EV maker isn't immune to the realities of the market. So, probably in the coming days, we might get more updates on the specifics of the layoffs, those who got laid off, and what departments were affected the most. But for now, we wait and see how it all plays out. What are your thoughts on this? Was laying off people the best strategy for Tesla to improve efficiency? Let us know what you think in the comment section. If you would like to know what Tesla has been up to these past few days, then go ahead and click on the next video on your screen. See you there.